The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 28th marvelous Monday edition of the Money Masters Show. Hope everyone out there had a fantastic weekend. Thanks so much for joining us. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that is something we must master each and every day. So let's begin our day with our empowering beliefs. We know that beliefs have the power to create and the power to destroy. You and I, we have that awesome ability to take any experience of our lives and create a meaning that disempowers us, or one that can literally save our lives and empower us to places we never even dreamed of. Think about it like this. There's only one thing that you can control in life, the meaning that you give something. That's the beauty of the markets we trade. We've got bulls, we've got bears, one that sees an event as a selling opportunity, another, a buying opportunity. Your beliefs, the meaning that you give to these events, or statements, or any criticisms out there, you are the one in control of that meaning. Pretty cool when you stop to really think about it. I think it's the most awesome power that you and I have. Why? Because what we can or cannot do, what we consider possible or impossible, it is rarely a function of our true capabilities. It's more likely a function of our beliefs about who we are. And that matters. And it matters why? Well, because all personal breakthroughs, they begin with a change in beliefs. So the question is always, how is it that we change? I consider that to be one of the best questions that we can ask ourselves. I found that the most effective way to change is to get our brain to associate massive pain, I mean massive pain, to the old disempowering belief system. We must believe at the deepest level that disempowering belief has cost us in our past. And if we continue, it'll cost us not just here and now, but ultimately it will only bring us pain in the future. Sometimes knowing what we just don't want, it is just as important as knowing what we do want. I think knowing both is key, because once we rid ourselves of our disempowering belief system, then we associate tremendous pleasure to the idea of adopting a new empowering belief. You know, folks, that whole formula I just gave you, that's from Charles Dickens' The Christmas Carol. It's much more than a movie out there. That's really how you stitch it all together. Lastly here, what I want you to know is that you and I, we must know that in any moment, a decision that we make can change the course of our life forever. The very next person we stand behind in line or sit next to on an airplane, the very next phone call we make or receive, the very next movie we see, or book we read, or page we turn. Maybe it's a master trader workshop that you attend. Maybe it's an event that's going to be held by Andy Hecht on Wednesday. Maybe it's Basil's on November 8th. Any one of these could be the single thing that causes the floodgates to open. And then all the things we've been waiting for will fall right into place. You know, there's only one question you really have to ask yourself, and that's this. If you knew that everything was going to turn out okay, how would you live your life differently today, folks? Well, let's go check out the markets here. Let's go see how they're living today. Right now, you've got the Dow trading down 9 points, trading out at 15,561. S&P up 2 points at 1761. The S&P, it says 1776. It wants to get to 1776. So it shall be written. So it shall be done. The next NASDAQ Composite, that's up 40 cents, so it's a flat market out there. 39.43. Russell 2000 up 30 cents, trading out at 11.18. Apple up 42 cents right now. They'll be out with earnings after the bell. We'll take a look at the Apple stock chart here in a few minutes. Google's off No, it's not off. It's up $6. Microsoft is the one that's down 40 cents right now. Leading the charge to the upside, you've got CF Industries up a nice 4%, up $8.63. Clovis Oncology up 10%. That's up $5.72. Google up $5.51. LinkedIn up $3.42. You've got Regeneron Pharmaceuticals up $3 and change. Biogen up $3 and change. Marathon Petroleum up $2.50. Lindsay Corp up $2. Bristol Myers Squibb up a couple bucks. Green Mountain Coffee Roasters, that's up a couple bucks. And our favorite, Hershey's Chocolate, that's up $2. Oh, yeah, we're getting towards that. You wonder if Hershey's Chocolate stock, is that affected by the mere fact that we're going into Halloween out there? Something to think about. Maybe we'll take a look at the stock chart. Let's go back and take a look at every September, October time frame. You've got to the downside, though, you've got Sohu. Sohu, S-O-H-U, is a ticker symbol, down 13% with some volume this morning. That's trading out at 70.49. Roper Industries, R-O-P. They're doing the rope-a-dope to the downside right now, off $5 and change. It's off 14%. Changyu Communications off 15%. Edwards Life Sciences down 5%, almost $4. Tesla Motors off $3. How could that be? It's off about 1 7/10% out there. Rentec Nitrogen RNF, that's down 13% this morning, off $3 and change. Amazon down $2, no big deal out there. Our call-in number, 877-927-6648. Would love to hear from you. Let's start off by taking a look at where we really need to focus, because where's the message of the market's going to come from today? Yeah, it's that thing we've been calling the weak link out here. Of course, if you were, we'll take a look at it one more time out here, because maybe it's not so weak. All that it's been doing is been traveling in a sideways consolidation range. Now, I got the Dow futures up on my screen, and the reason is because it was the first one. It was up and out of bed, well, early last night. As the futures market opened, we saw the Dow futures actually get up, test the top of the consolidation range, as well as test the swing point high from September 19th out there. That low is 15,557. Boy, you close inside 15,557. That says a test of 15,658 would be the number. And if you close above 15,658, here we come, 1,000 points to the upside strong. That'll take the Dow. That'll suggest the Dow now would be ready to break that 1,000-point consolidation range. That'll take 15.5 and turn into 16.5 in a hurry. And that would be coming from the weak link out here. So we want to be paying attention to the Dow. Now, this is the futures contract. We'll take a look at the index here in a bit. Let's go switch over, take a look at VIXI, Basel's VIXI, the VIX index here, trading below the 50-day exponential moving average. The markets have clear sailing to move to higher price so long as the VIX is below that 50-day exponential moving average. No problems out there. We take a look at the New York Stock Exchange here. Let me see if I can pop this up here on a spreadsheet of mine. I give you the actual number. What would it take in order for the bears to get control of the market today? You'd need to see net declining issues of 2,359 or greater. That would give conviction to the bears. Right now, as I take a look at the market here, let me switch to this tab. That says we've got net advancing issues 146, so we don't see that in the offing here. New York Stock Exchange free to run up to the top of the it's a larger rising price channel. That would be this kind of red line. I know this is a little confusing chart going across my screen, but I'll unconfuse you. 10,120 is where the New York Stock Exchange wants to travel to. It's trading at 10,059 out there, so it's got some room to run to the upside. That's really just the first stop or the next stop inside of the New York Stock Exchange. I can see it moving much higher than that, but that is the first target area for the NYSE. Let's go take a look at the S&P 500. You know, it's up, but there was, on the daily chart, if there was any resistance area, it would have been the high of October 22nd, 1759.33. The S&P 500 closed just slightly above it, closed at 1759.77. Nonetheless, a close above resistance is a close above resistance. What does that set up? That sets up sweet 1776. There's two A to B equal CD patterns in the marketplace, both of which converge at that 1776-ish level out there. So that that is the target range for the S&P 500. Does it have to stop there? No, it doesn't have to stop there. That's just your A to B equals C. Remember, we use these as guidelines. It doesn't even have to get to 1776, 1777. If it got to 1774 in reverse from there, I'd say, okay, completed that pattern. But right now, it's a trade at 1762. It wants to get up there. It needs to get up there. We want the S&P on that fence. That was my best Jack Nicholson attempt there from a few good men out there. And anyway, that's what the S&P 500 wants to do. If we take a look at a weekly chart, the week has gone by. Let's go see what kind of candlestick it looks like here. You can also see on the weekly chart there is your longer-term rising price channel. That's going to become a little bit of a resistance area, only a little bit, because with price moving higher, no reason that it can't get beyond that level. But if we take a look at last week's charts, there's nothing bearish about that chart out there as we take a look at the candle close on the weekly. And then there's that thing of beauty out here. That thing of beauty is the monthly chart. Now, we're coming to the end of the month here. That's on Friday. If you take a look at that candle configuration out here, it is a thing of bullish beauty out there. No bearishness inside of that candlestick as we speak. You can also see, coming off of the lows here from 2009, it's up above the 1 to 1.272 A to B equals CD. That does suggest 1907. Actually, that's your 1 to 1.618 A to B equals CD, but we'll take things one thing at a time. Again, this upper boundary line of the price channel, should become some resistance area out here. But 1776, that is most certainly in the offing. If we go take a look at the Dow here, here's the Dow. You can see how the actual cash index, you wouldn't have known, and it's an important thing. That's why I want you to pay attention to the futures contracts. You don't necessarily have to trade them, but if you want to be able to fill in the blanks, and there's a lot of blanks, right? You've got basically, 18 hours worth of blanks to fill in. That's why you want to be paying attention to the futures markets, because price is always giving you information. Patterns are always providing you with information. In this case here, the Dow Jones Cash Index, it wants to go. It's trading inside the swing point, certainly from September 18th. So if you're inside a swing point, whether it's with volume or not, it says, I want to go test the high. That says 15,709.58 is really its target. It's trading at 15,577. You get it close above 15,709. That's what will set up the move higher, 1,000-point move higher if we can see a real breakout. Now, you'd like to see some real volume coming in. Now, it hasn't done that yet, right? It hasn't done that. And so we have to be paying attention to this, because it's very well possible that 15,709 could be the extent of the move out there, and then it just trades in the 1,000-point consolidation range back to the bottom. If it can't bust them up, it'll go ahead and try and bust them out to the downside. But we'll take things one thing at a time. What we do know is that the Dow is starting to reach towards the top of that consolidation zone, so we're going to get a bunch of information out there. If we pull up the Dow Jones Index here, let's take a look at the weekly chart. You'll see the weekly chart, the same consolidation pattern, but last week, no bearish candle out here. You do have a shooting star, and that's going to be key for us to be paying attention to, because that shooting star is the high of September 20th. That is at 15,709.58. If you close above that, that will become support. Comes back and tests it, rejects it, comes back and tests it, rejects it. That will be really giving. You'd like to see 3 tests of that, because 3 tests of that would be telling you, okay, now we're ready for 1,000 points move higher. And some of you out there, you might be saying, come on, there's no way it can happen. Guess what happens on Friday, folks? It's November 1st. It's also the beginning of the 6-month favorable seasonal cycle out there. Something to think about. 877-927-6648. We'll be right back, folks.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 $79 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Really quiet market out here. Dow's off 2 points. S&P is up 2.5. NASDAQ is up a point. Russell 2000 up less than a point out there. I think it is a great day to do a little barefoot water skiing out there. You want to do it on a flat surface, that's for sure. Makes it a whole heck of a lot easier out there. Let's go check out the one of the flat markets, the Russell 2000. As we take a look at the Russell 2000, it's got a little bit of a of an obstacle that it wants to get out of its way so that it can move higher. The obstacle being that little doji in my window here. If we take a look at it, that's the October 22nd doji candle, the high of which is 1121.53. You see a close above that, that is resistance. If you see a close above 1121.53 out there, and we almost had it on Friday, got up to 1121.92, but closed at 1118 and change out there. That is the number you're looking for inside the Russell 2000. A close above 1121.53. That'll be clear sailing to its next stop. Its next stop is really, you'd have to say, between the range of 1130 to 1137 out there. Right now, trading at 1119. That's the little engine that can, but first it's going to have to clear that obstacle. Now, that's on the daily chart. If we go take a look at the weekly chart for the Russell 2000, it too really a thing of beauty, not a doji candle. A little bit of a confusion, high wave-ish type candle session out here, but you can see nothing but bullishness inside of this equity. The longer term, 1 to 1.618. A to B equals CD. That gets you to the 1127 mark. That's coming off of the March lows out there. That is in the Russell 2000. If we take a look at the NASDAQ composite out here, it did have that key reversal session in place that took place on October 22nd. That key reversal session really still in place because of Friday's close, which was just a tad below the top of that candle, which was the high of the candle on 22nd is 39.47 and a bit of change. We closed at 39.43 here yesterday. I'm using that truly as the resistance marker. Close above 39, and you should too. Because Friday's candle was not a bearish candle or reversal signal whatsoever. So you get a close above 39.47.67, and then it'll be off to its races, moving us into the 39.62, 39.73. Well, 39. No, forget about 39.62. We hit that on Friday. I would have to say, well, you got 39.73, but really, no, it's amazing. 4,047. That would really be what could be next up on its mark. But 30, yeah, that's the NASDAQ composite. It is just simply a thing of beauty when you start taking a look at A to B equals CD patterns. I'm going to turn this one to red so I don't even confuse myself. Yeah, so I would say 4048. 4048 would be the number on the NASDAQ composite. If it can clear resistance, of course, it's going to be the Dow that will now drag everything higher. It's the Dow that needs to break the consolidation zone. If it can break it, that's what will unleash the juggernaut out here with prices moving higher. If the Dow can't do that, then all bets are off to the upside. The Dow will go ahead and it'll drag things down because it'll start saying, well, it couldn't bust it up, and so it'll go and try and bust it low. But it's pretty cool because when you put all these markets together, you take a look at different resistance areas, you know what it is we're dealing with. You know, you always like to know what the weather pattern looks like ahead of time. That way you can make all of your plans out here. If we take a look at the NDX, this will certainly move this evening. May not move, well, it should. May not move here much today, and it's not. It's flat. It's trading out at 33.81, but we got Apple out with earnings. I believe their earnings release is right at 4:30, so it'll be at the 4:30 session where we'll get some type of feel for what the NDX and composite, what the markets are going to do out here. The NDX 100 did manage to close above the key reversal session from October 22nd. The high was 33.84 and a bit of change. We actually closed at 30. Oh, we didn't. Wait, I'll be a son of a gun. Did I miss that? Let's see. The high is 33.84. No, we did not. The NDX did not close above that number. So it does what the NDX needs to do in order to get above resistance. That's going to be your high, 33.84. 35 out there. You're trading at 33.81 right now. So the NDX maybe it's just sitting back on its heels, and I don't know, maybe it's just going to wait for the numbers from Apple. So if it's going to wait for the numbers from Apple, you shouldn't have to wait for the numbers from Apple. Let's go take a look at Apple. Let's go see what its stock chart is suggesting to us. Number one, as we take a look at Apple today, trading sideways to slightly lower. It's trading out at 525.23. Volume in the stock so far today, 3 million shares. I made a little bit higher high with 12 million shares on Friday's session. We have a confirmed A to B equals CD. What I mean by that is it has crossed its B point with volume. The volume and the B point being August 19th, 18 million shares. It got up and over it with 19 million shares. The trading session of October the 22nd. 1-to-1 takes you to 572. Is that what Apple would do? Would it only do a 1-to-1? Absolutely, positively. Nah, I don't think so. It's more like a 1 to 1.272, maybe a 1 to 1.618. 877-927-6658. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's trading up 15 points right now. S&P is up 70 cents. Just back to the Apple chart out here, see if we can get any clues. So we do know about Apple. It has confirmed that 1-to-1. It has confirmed an A to B equals C to up. Which version of it, whether it's 1-to-1, 1.272, 1-to-1.618, that is in itself, it has not really given us much of a signal out here. What we also know is that Apple's up and above some resistance areas, some of these open windows that have been repaired, so they're no longer there. These are the gap downs. You see here the one that it was most recently dealing with, which was from the trading session of January 11th. January 11th, the low on this stock is 519.02, gaps down with volume of 26 million shares. You can see that window was repaired. With lighter volume, nonetheless, it's repaired. It no longer acts as a resistance area, so that gap is gone away. So the next area of resistance inside of Apple really becomes the swing point out here from January 2nd, the high of which is 555. Even Stephen out there, you can see just above 555 is your completion of your 1-to-1 A to B equals CD. 572.26. There has been buying pressure inside of Apple, more so than selling pressure. We'll see how the market here responds, but everything here suggests a move to the upside inside of Apple, and we'll see if, in fact, that is the way that the market responds to it. Should be, at least in the past, it has been wild days when Apple has come out with earnings, so we'll see what that looks like sometime between 4:30 and after a while, because I think they always release at about 4:30 in the evening. In the meantime, let's look at some of our other core stocks out here. We covered Intel. I think that was maybe during the last session out here. Intel confirming an A to B equals CD up on Friday, passing its B point with volume. Nicely done with volume. 59 million shares taking out the B point from September 19th that only had 28 million shares out there. And it's already closed its gap down window as well. So looks like Intel should head to the 24.66. That's the 1-to-1. I say more likely we'll find out at 24.75, and if it closes above that, then $25 is in the zone for Intel out there. That'll help the semiconductor index. If we take a look here, we've looked at Apple. Let's take a look at Microsoft, see what it is doing out here. Microsoft really closed that window as well on Friday. And this is the window that was created by this huge gap down, 248 million shares of downside inside of Microsoft. So that no longer is going to be an area of resistance out here. Now, I can't say I'll use it as an area of support just for the time being, because old resistance will become new support. And so now we'll see if 35.22 becomes the support level for Microsoft. So far, intra-session today, it's been down to a low of 35.27. If it closes back below that support level, then it will just simply say that we're looking at a consolidation range from the high of which is about 36.43 down to the low of that trading session on July 19th out at 31.02. So instead of being a 4-point trading range, it'll more likely be a 6-point type trading range. That is on Microsoft. If we take a look here at IBM, IBM is back inside, or trying to get back inside this descending price channel out here. This is the price channel coming off of the highs back here in April of 2013. So you can see it's right on that line out here. If it can get back inside of the price channel, that will set up a move to test that 182 range where it broke out of that 30-point consolidation. So far today, IBM is trading just slightly lower. No real volume behind its move. It's trading out at 176.51, so no conviction behind the move inside of IBM in either direction, up or down. ExxonMobil, XOM is the ticker symbol here. It's in its 7-point consolidation range. Had a nice small little sign of, we won't really call it a sign of strength. We'll just simply call it a open window to the upside. That is being tested here this morning by testing the October 23rd high, which is 87.65. 11 million shares there. The pullback so far this morning, 1.7 million shares during the first hour of trading out here. So very light volume on the pullback. What ExxonMobil needs to do is clear the swing point from September 18th. If it can do that, which is 89.87, then you will see ExxonMobil trade all the way up to its consolidation high, somewhere in the $93-ish range. It does have a resistance level, not just set up by the consolidation, but also by the gap down that occurred on August the 1st. So whether it's the high of 93.10 or the low of July 31st at 93.38, that becomes the target range. And it looks more likely to me that that's what ExxonMobil actually wants to do. Couldn't bust it out to the downside. Now it's going to try to make a run for the upside. Just has a little bit of resistance in order for it to get through, and that's that September 18th area. No surprise there, because it's like that inside the markets. Let's take a look here at Google. Google trading out at $1,000.18, making a nice big move with volume. Google wants higher price. All that it's doing right now by just simply trying to travel sideways here for a bit, maybe pull back a bit. All that Google wants to do is work off an overbought condition. So it got into that extreme overbought condition level area, but Google actually wants higher price out here. And once that condition is worked off, that is what it will do. Amazon had a nice week. Just take a look at that weekly trading session. Last time we saw a week like that inside Amazon was the week of April 27th. And that was when it went from a low of 185 to 228 out here. We see the exact same candle session out here inside of Amazon. So it, too, looks like it wants to take on higher price in the marketplace. Not a bad-looking stock chart. And you had good volume last week. Did 27 million shares out there, so not too shabby for the amazing Amazon. J.P. Morgan, let's go take a look at J.P. Morgan, see what it is doing here. Really, this thing has just been pretty much in a consolidation. It's got great support down at the lows of $50 and a little bit of change out here, so nothing much left to say about J.P. Morgan that I can see. Our call number is 877-927-6648. Let's take a look at some of these stocks out here this morning that are popping and dropping. We haven't taken a look here at Bristol Myers Squibb, so let's go look at that. BMY is its ticker symbol. Let's go see what Bristol Myers Squibb is doing. They must have been out with earnings. Boy, they got some nice volume in this equity here this morning. Let me see if they are out with numbers and what they might be. Let's see. No, I don't see it. I don't see biopharma percent. I don't see. There's something moving it, and I can tell you what's moving it. The bulls. The bulls are moving the equity here. So this morning it's up with 13 million shares. Let's pull this back even further. Is this at all? Let's put this on a monthly chart. We'll really pull this back. Yeah, this thing is at all-time high, so it's taking out its most recent swing point here. Let's go back to the daily. That most recent swing point inside Bristol Myers was, let's use the trading session here. This is the one we want to pay attention to because this would really be the B point of the A to B equals CD. That is from June 3rd, the high of which is 49.57. You can see we're certainly above it here this morning. That had volume of 27 million shares, so that B point with 27 million shares so far this morning, it's been tackled with 13 million shares. So it looks like we're going to have a confirmed A to B equals CD up inside this equity. Where you want to take it to? Well, if you take the larger A to B equals CD, you'd start down here November the 15th or 16th, whatever that low was, that your high out here is going to be what we were looking at earlier, the June 4th level, which is, or June, what date is it? June 3rd. That's the one with 27 million shares. It pulls back into the August 22nd level. So 1-to-1 A to B equals C. This is the second sign of strength off of that C point. That's very, very powerful. That says that $60.06 is the minimum target on the longer-term A to B equals CD for Bristol Myers Squibb. BMY is the ticker symbol. Having a nice showing here this morning. Oh, I said we would take a look at Hershey's chocolate. Now, me, I'm a dark chocolate. I prefer dark chocolate. How about, in fact, if I were out trick-or-treating, all you have to do is fill up my bag with dark chocolate. I wouldn't need anything else, and then I would be in a chocolate heaven. And chocolate heaven is a good place to be. If we take a look at Hershey, well, it's in chocolate heaven this morning, moving higher with some good volume. It's got a wide price spread, most certainly. What's behind the move of Hershey's, SHY? Not a darn thing. It just must be trick or treat. This looks like treat altogether. That treat right now today, 409,000 shares, taking out a B point of an A to B equals CD. That B point is August the 9th. Only 738,000 shares, so it looks like we got a confirmation of an A to B equals CD here inside of Hershey's. Let's go take a look at that pattern. Your A point's going to be your low from June 20th, $85.14. Your B point out here looks like the session, let's see, that's 98 even, Steven, and you got 97. So it's 98 even, Steven. On August the 9th, $98 is a number, makes a retracement down into the September 6th time frame. That is a low of 89.28. 1-to-1. That is a shorter A to B equals CD. 1-to-1 says 102.16. It's trading at 99.56, so it looks like that is in the cards for Hershey's. I did say we'd go take a look and see what this thing does right around the end of October. So let's go take a look at the end of October in 2012. So let's see, October 2012. Nope. No sweetness, just because of Halloween in October 2012. If anything, it actually pulled back to a low. Well, I take that back. I take that back, don't I? Not so fast. as Lee Corso would say, because October 31st of 2012 was a final low before Hershey's went ahead and took off. Very interesting, isn't it? Let's go take a look at October of 2011 inside of Hershey's. Let's go check out its sweetness out here. Let's see. October. All right, October 31st. October 31st. And it made a slightly lower low, Hershey's did. Looks like for maybe a couple of weeks, was trading inside a swing point back here, but then it went ahead and it took off. It has some sweet sensations here during the favorable seasonal cycle. Looks like it gets a little bit of a sugar fix. Hey, let's not stop here in 2011. We might be on to something here inside the old. This might be giving us a nice Hershey's kiss out here. Let's go check out October of 2010. What can we find out here in October of 2010? October 2010. It has the same pattern as it did in 2011 out there. Moved slightly lower for about 15 days. Of course, November 16th, the markets made it wasn't 2010, November 16th, when the markets made a low out there. And then it moved up quite a bit higher inside Hershey's. So Hershey's looks like it makes a low sometime between where we're at right now and November 15th. Let's go one more. Let's try 2009, of course, off of the bottoms out here. Let's just see what it was doing as it was struggling with the market. So Hershey's, October 30th. It just makes slightly lower low coming into that November time frame, November of 2009. It didn't wait till March of 2009. Well, that's much back much earlier. So very, very interesting. Maybe somebody out there wants to go study Hershey's chocolate, because that is up nicely this morning, taking out an A to B equals CD. Let's go take a look. What else we have that's moving out here that we want to pay attention to? What do we want to look at? Just looking through through what's moving inside the markets out here. How about Rentec? Let's go take a look at RNF. That is, I think that's one of the nitrogen stocks out there. So we'll take a look at Rentec and Mosaic, see what they're doing. Rentec, RNF is the ticker symbol. That is down pretty good this morning, a healthy 15%. Oh, it was down apparently on Friday as well. Yikes on this thing. This thing had some volume blow out of it. So it's headed all the way back down to, looks like this thing may have been an IPO back in November of 2011. That trading session was a high of 1929. Low of 1929, high of 2020. You're trading almost below that right now. Not a good-looking stock chart at all. It's taken out its swing point here, or took out its swing point, I should say, from June 4th of 2012. So not looking good here for Rentec. RNF is a ticker symbol. So now let's go check out, pretty sure this is the part of that group out there, Potash, Mosaic. So let's go look at Mosaic, see what it's doing. So that's holding up better. I don't know what blew Rentec apart out here, but something blew it up on Friday, and it's got some additional follow-through here this morning. So Mosaic here, still, after this thing blew away its 45-point consolidation zone. That was back on the day when Russia said, so much for what we're going to do here. We're just going to blow everything apart when it comes to these fertilizer stocks. But it's now back inside its 45-point consolidated trading range. That was a 22-month, it's an 18-point consolidation range here. But I can't suggest that you take a trade on this thing here. This had just too much volume blow apart on July 30th. So I would just pay attention. I would look for some kind of sign of strength inside this before I would step into it. And in the case of Mosaic, we really have not seen that. Let's go take a look at Potash. POT is the ticker symbol out there. Potash looks like give me a second here to make sure I update this, get the proper volume. So this thing had some additional volume to the downside on the trading session of October 24th. Didn't get down and test the lows. You would like to have seen it at least get down and test that area from July 30th, which is $29 even, Steven. No trade that I really see here inside of Potash. POT is its ticker symbol. Very flat market. Dow is down 63 cents. I'm doing the best I can to keep you entertained. 877-927-6648. We got it right that time. We'll be right back, folks.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's down 15. S&P is flat. Let's go check in on the FTSE out here. I've got the weekly chart for the FTSE up on my screen out here, and you can see that it is up against a long-term resistance level, taking us all the way back into the 2007 time frame. If you're watching us on Tiger TV, you can see the black horizontal line going across my screen. That takes us into the area that the first bearish engulfing candle that formed out here on July 20th, 2007 2017. That's a weekly chart that we're looking at. That was the first one that we saw. That was set through resistance level up at about 67.54 inside of the FTSE. The next time that it was up there was back in October of 2007. No surprise there. Another bearish engulfing candle on the weekly chart. That set up 67.51 as a resistance level. Then the last time that we saw the FTSE back up at this range was back in May of 2013 out here. And no bearish engulfing. A little bit of a dark cloud cover, a little bit of follow through. Not a little bit. You had the follow through on the following month out there. So you can see here, it's a weekly chart. You're coming into it with a nice wide-ranging bar here last week. So that's the area where it is tackling. And I would say real resistance would be a close this week above that line. Yeah, it's got to get above the wicks too, just to confirm any kind of a breakout or any kind of breakout action. But boy, a close above what I would say would be 67.24. It's at 67.08 right now. That would confirm that a breakout would be beginning inside of the FTSE. If we take a look at the daily chart patterns that are out here, this formed a nice little Gartley buy pattern. Did a nice 1.272 expansion of a set of swing points. Those swing points being August 21st low at 63.86 and change, all the way up to the high put in on September the 19th. Somebody looking at the chart might say, hey, it's not a 0.618 retracement. How can that be a Gartley pattern? Now, if you actually go take a look at H.M. Gartley's work out there, he never talks about the Fibonacci numbers. He's just saying you need an A to B equals CD pattern in the opposite direction of the trend. And that's exactly what the FTSE did as it completed that pattern. It completed it on October the 9th. Make sure that's correct. Yeah, it completed that 1-to-1 A to B equals CD on October 9th, and then had that nice big bullish engulfing candle session on October 10th, confirming that pattern out there. Now what it's done, it's made that 100% move of a move. It's gotten above the level, the swing point from August 2nd out here. That says it wants to go tag the swing point high from May 22nd, and that will take you into the 67.81 to 68.75 level. And, of course, if it can do that, which is what it wants to do, and it's able to do that by Friday, what we might actually see is a close above the resistance level that we were looking at inside of the weekly chart for the FTSE. So might not be bad to pay attention to that as well. As far as the markets here, what to be paying attention to today? Well, if you take a look at the ES Mini, I'll do that for you right now. Watch the area of 1748.25. That should be a key level of support. If you see a close below 1748.25 today, that specific number, that will actually be bearish. That'll say correction in place in the marketplace out there. That'll be the first signal that I would be, well, that's the signal that I'm looking at. We want to also be paying attention to the Dow. Of course, the Dow futures, Dow futures have tested the top of the consolidation range as well as the swing point for September 19th. The cash index has not yet. We want to watch that, because if today you see it close above this consolidation range, that sets up the potential of a 1,000-point move to the upside. Folks, stay tuned. Mr. Basil Chapman is up next. We're going to go ride his wave. And after that, we've got Larry Pesavento. We've got Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Have a marvelous Monday, folks. Look forward to seeing you on Terrific Tuesday. Take care, folks.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.